Let me ask you something. You work hard, you earn money every month, but somehow, at the end of the month, it's just gone. Not on anything big, not on a vacation or a new car, just gone, spent on small things you barely even remember. And the worst part? You tell yourself, next month will be different. Next month I'll save more. Next month I'll be smarter. But next month comes, and the exact same thing happens again. Here's what nobody tells you. It's not about how much you earn, it's about the habits running silently in the background. Habits so normal, so everyday that you don't even notice them draining your wealth one small decision at a time. Today we're going to talk about 10 bad money habits that are quietly keeping you broke. And I promise you, by the end of this video, you'll never look at your spending the same way again. Habit 1, spending before saving. Most people follow one financial formula their entire life. Earn money, spend money, save whatever's left. The problem? There's almost never anything left. This is called paying yourself last, and it's the single biggest reason people who earn decent money still have nothing in their bank account after 10 years. The fix is brutally simple. Flip the formula. The moment your salary hits your account, move a fixed amount to savings first. Even if it's small, even if it's just 2,000 rupees a month, automate it so it happens before you can spend it. Pay yourself first. Spend what remains. This one shift changes everything. Habit 2, lifestyle inflation. You get a raise, great. You upgrade your phone, you start ordering more, you move to a slightly better apartment. Life gets a little more expensive, but that's fine because you're earning more now, right? This is called lifestyle inflation, and it's the reason people earning 2 lakh a month sometimes struggle just as much as people earning 50,000. Every time your income goes up, your expenses quietly rise to match it. The gap, the space between what you earn and what you spend, stays exactly the same, or gets worse. Wealth isn't built by earning more. It's built by keeping the gap wide. When your income grows, let your savings grow faster than your lifestyle does. Habit 3, living without a budget. Here's a question. Do you know exactly how much you spent last month on food, on entertainment, on random online purchases? Most people don't, and that's the problem. Not having a budget is like driving somewhere new with no GPS and no map. You might eventually get there, but you'll waste a lot of fuel and take a lot of wrong turns. A budget isn't about restricting yourself. It's about telling your money where to go instead of wondering where it went. Even a rough monthly plan, 50% needs, 30% wants, 20% savings, gives your money direction, and direction creates momentum. Habit 4, the minimum payment trap. Credit card companies are very, very good at one thing, making debt feel manageable. You owe 30,000 rupees, but the minimum payment is only 1,000. Easy, right? Affordable. No stress. What they don't show you is that paying only the minimum can take years to clear that debt. And by the time you're done, you've paid almost double the original amount in interest. The minimum payment isn't a lifeline. It's a trap designed to keep you in debt as long as possible. Always pay more than the minimum. Always. Even a small extra payment every month cuts your repayment time dramatically. Habit 5, no emergency fund. Life doesn't warn you before it gets expensive. Your bike breaks down, a medical bill arrives, you lose a client. These things happen, and when they happen to someone with no emergency fund, there's only one option: debt. And debt taken in a crisis is almost always expensive debt. Personal loans, credit card swipes, borrowing from family, all of it comes with a cost. Financial or emotional. An emergency fund isn't exciting, it doesn't give you returns, but it protects every other financial decision you make. Start with a goal of saving 3 months of your expenses. Keep it liquid, keep it separate. It's your financial shock absorber. Habit 6, impulse buying. You weren't planning to buy it, you didn't need it yesterday, but today it's on sale, and suddenly it feels urgent. This is how impulse buying works. Retailers and apps are engineered to trigger a psychological response, urgency, scarcity, desire, that bypasses your rational thinking and goes straight to your wallet. The 48-hour rule is simple and it works. When you feel the urge to buy something unplanned, wait 48 hours. Don't buy it immediately, just wait. Most of the time, the urge disappears. The thing that felt urgent on Monday feels completely unnecessary by Wednesday. That pause is the difference between a purchase and a regret. Habit 7, ignoring small expenses. Here's a habit that sneaks up on almost everyone. 200 rupees on chai and snacks. A streaming subscription you forgot about. A weekend delivery fee here, a convenience charge there. Each one feels harmless. Each one barely registers, but add them all up across a month and you might be looking at 3,000 to 5,000 rupees quietly disappearing on things you didn't consciously choose to spend on. This is called the latte factor. It's not about never enjoying small things. It's about being aware. Track your expenses for just 1 month. Every single transaction. What you find will probably surprise you. Awareness is free, and it's the first step to fixing every money problem. Habit 8. keeping up with others. This one is deeply psychological, and almost nobody admits it. Your friend buys a new car, your colleague takes a European vacation, someone from college posts their new apartment online, and somewhere in the back of your mind, a quiet pressure builds. Psychologists call this social comparison, and it is one of the most expensive habits a person can have. You start spending not based on what you need or what you can afford, but based on what you think your life is supposed to look like compared to others. Here's the truth. Most people you're trying to keep up with are also in debt. The car has an EMI, the vacation went on a credit card, the apartment is draining their savings. Real wealth is quiet. It doesn't post on Instagram. Run your own race. Habit 9, not investing early. This might be the most expensive habit of all, and it's one of inaction, not spending. Every year you wait to start investing is a year of compounding you lose forever. Let's make this concrete. If you invest 5,000 rupees a month starting at age 25 at a 12% annual return, you'll have roughly around 3.5 crore rupees by age 55. Wait just 10 years and start at 35. With the same amount, and you end up with barely 1 crore. Same money, same effort, 30 years versus 20 years. The difference is more than 2 crore rupees. That's not a small gap. That's the difference between retiring comfortably and struggling into your 60s. Start now, start small, but start. Time is the one ingredient in wealth building that you can never buy back. Habit 10, having only one source of income. There's an old saying, never depend on a single income. Make an investment to create a second source. Most people spend their entire career relying on one salary, one company, one boss, one paycheck. And the moment that one source disappears, a job loss, a pay cut, an unexpected crisis, the whole financial structure collapses. The wealthy don't just earn from jobs, they build multiple streams, investments, side income, dividends, rental income, online work, not all at once and not overnight, but intentionally over time. Start small. A simple SIP builds investment income. A skill turned into a weekend service builds extra cash. A digital product, a freelance project, a small online hustle. Any second stream reduces your financial risk and accelerates your wealth. Don't wait for financial security to find you. Build it from multiple directions. Here's the thing about bad money habits. None of them feel dangerous in the moment. That's what makes them so powerful. They're comfortable, they're familiar, they feel like just the way life works. But wealth is simply the result of better habits, repeated consistently over time. You don't need a higher salary. You don't need a lucky break. You don't need to be a finance expert. You just need to catch the habits quietly running in the background and start replacing them one at a time. Because the version of you that broke these 10 habits, that person doesn't just look different financially, they feel different. They sleep differently. They make decisions differently. And it all starts with one honest question. Which of these habits am I going to fix first? Think about it.